The recent application by BlackRock for a Bitcoin ETF has stirred considerable interest in the Bitcoin market, resulting in a notable surge of over 18% in prices. However, this announcement has also sparked a distinctive trading dynamic that is driving an uptick in the sale of Bitcoin on the spot market. Consequently, this trading phenomenon is exerting downward pressure on the price of Bitcoin. This specific trading dynamic is known as the GBTC discount to net asset value (NAV) arbitrage. In this discussion, we will delve into the mechanics of this trading approach, examine why it has introduced selling pressure on the spot Bitcoin markets, and analyze the subsequent effects that will unfold as the trade is eventually reversed. Background on the Grayscale Bitcoin Trust. Grayscale, established by Barry Silbert in 2013, is an American company that initiated the first Bitcoin Trust in the same year. In 2015, the Grayscale Bitcoin Trust was introduced for over-the-counter trading on the OTC market, becoming the inaugural publicly traded Bitcoin fund in the United States. The fund structure displayed a few distinct features. Firstly, it imposed a management fee of 2%, a notable difference from the 0.54% average across the ETF realm, as reported by Bloomberg Intelligence. Secondly, the fund permitted investors to contribute Bitcoin to the trust and convert it into equivalent GBTC units. Nevertheless, the reverse process of redeeming GBTC units for Bitcoin was not feasible. Significantly, to convert spot Bitcoin into GBTC units, investors were mandated to endure a 6-month lockup period before obtaining the GBTC units. These distinctions hold significant relevance for the ensuing analysis. At its peak on November 7, 2021, the fund held nearly $63 billion worth of Bitcoin. The premium trading strategy Grayscale found itself in an advantageous position at the right moment. It was the solitary avenue accessible to investors seeking to engage in trading through their brokerage accounts without resorting to cryptocurrency exchanges or personal custody of Bitcoin. It's important to note that GBTC was launched 4 years following the inception of Bitcoin in January 2009 and just 6 months after the establishment of Coinbase in May 2012. Between 2013 and 2016, Bitcoin's popularity witnessed a surge, and so did Grayscale's GBTC fund. Investors aspiring to invest in Bitcoin were prepared to pay a premium for GBTC over spot Bitcoin, avoiding the necessity to navigate the relatively nascent Bitcoin exchanges. Moreover, this approach circumvented the complex process of holding Bitcoin in self-custody during that time. As the price of Bitcoin surged during the 2017 to 2018 bull run, the premium of GBTC relative to its net asset value skyrocketed, reaching a peak of 132% on May 31, 2017. This indicated that investors were willing to pay more than double the price to possess GBTC as opposed to spot Bitcoin. To put it differently, an individual who invested in one spot Bitcoin on December 31, 2016, and acquired GBTC units on May 31, 2017, could have sold those units for dollars and subsequently repurchased 130% more Bitcoin than their initial investment, equivalent to 2.3 BTC. The GBTC trade facilitated a transformation from 1 spot BTC to 2.3 spot BTC within 6 months. The process of this premium trade unfolds in the following steps. Purchase a Bitcoin in the spot market for $10,000. Subscribe the spot Bitcoin to convert it into GBTC units. Wait for 6 months. Sell GBTC units for $23,000 in cash. Utilize the $23,000 to procure 2.3 BTC on the spot market. Stated alternatively, the premium trade arbitrage involves purchasing spot BTC and selling GBTC, which added buying pressure to the spot Bitcoin markets during positive premium periods. Transition from premium to discount. As the knowledge of this trading approach spread, more investors joined in, leading to increased buying pressure in the spot Bitcoin markets. Simultaneously, the GBTC units encountered heightened selling pressure, causing the premium to shrink to a low of plus 6.09% on November 19, 2018. Despite this, the GBTC premium endured, and Grayscale garnered 2% returns on roughly $50 billion at its zenith. This translated to around $1 billion in annual fee revenue for Grayscale. The success of GBTC attracted other players to the Bitcoin ETF prospect. By December 2020, various Bitcoin trusts and funds emerged worldwide. The first regulated exchange-traded product for Bitcoin debuted in Europe, devoid of a management fee. Shortly after, another European Bitcoin ETP was announced. Merely days following the unveiling of the second European Bitcoin ETP, the inaugural Canadian spot Bitcoin ETF was granted approval. During this period, many investors chose to conclude their trades with a minor loss to cap potential downsides. However, challenges persisted for GBTC. Following the authorization of the futures-based Bitcoin ETF, the SEC rejected Grayscale's application to transform GBTC into an ETF. This further deepened the discount in comparison to net asset value. The discount reached its pinnacle on December 13, 2022, at -48.89%, thus engendering a fresh arbitrage opportunity. Mechanics of discount arbitrage trade. A prevailing expectation among investors is that GBTC will eventually transition into an ETF. Failure to do so could hinder its competitiveness against other offerings in the market. When a closed fund like GBTC transforms into an ETF, the asset value within the fund mirrors the value of the fund units. Consequently, no premium or discount is present. To neutralize the discount in relation to net asset value, investors must undertake the following steps. Purchase GBTC shares. Engage in a short sale of an equivalent amount of Bitcoin on the spot markets. Await the reduction of the discount to zero. Sell GBTC shares. Cover the short position in spot Bitcoin by purchasing Bitcoin in the spot market. Upon the announcement of the BlackRock ETF application, investors swiftly embraced this trading strategy. On the day of the BlackRock announcement, the GBTC discount stood at -44%. Presently, that discount has narrowed to -27.39%. As long as the discount persists, it provides an incentive for investors to purchase GBTC units and vend Bitcoin on the spot markets, consequently augmenting selling pressure within the Bitcoin spot markets and impeding the progression of Bitcoin's price appreciation. Anticipated developments. Upon the complete nullification of the discount, the investment objectives will have been accomplished, mandating the closure of the trade. The cessation of this trade involves the sale of GBTC units and the subsequent acquisition of Bitcoin in the spot markets to conclude the short position. This dynamic triggers buying pressure within the spot markets and prompts selling pressure on GBTC units. In essence, the current scenario incentivizes investors to short Bitcoin in the spot markets due to the existing discount. However, once the discount reaches zero, which might occur concurrently with or prior to GBTC's transition into an ETF, the selling pressure exerted on the spot Bitcoin markets will transform into buying pressure. This shift will arise as investors seek to conclude the discount arbitrage trade. Presently, GBTC retains Bitcoin valued at $18.8 billion. Assuming that approximately 10% of these holdings are linked to investors participating in the discount arbitrage trade, unwinding this trade could result in a significant buy wall of around $1.88 billion in the spot Bitcoin markets. Thanks for watching.